Hi everyone. In Canada, people love to use acronym. Did I say it right? Acronym. So there are so many in the financial world as well. Like you probably know a lot of them. RESP, RSP, RDSP, TFSA, oh, so many. So today we are going to talk about what they are and the differences, so that you know what we are exactly talking about. So a very confusing one people ask me is RESP and RRSP. RESP is the Registered Education Savings Plan. So it's for parents if they want to help their children save for post-secondary school, and so RESP is the right account to go. So basically, in RESP, you use your after-tax money to contribute, and government will have a match. Say if you put in $100, the government will put in $20 or more, depends on your income, or maybe there's other grant the government will give to your children. So that's RESP. So by the time your child goes to university and they can take this RESP money and it will count as their income for the growth part, because most of the students don't have job or have very minimum part-time job. So basically they don't really pay much tax on that investment growth. So the next one, RRSP, is I think most of us are very familiar with. It's the Registered Retirement Savings Plan. So if you work in Canada, you would know that on your notice of assessment every year you will see a RRSP room, and based on that room, so if you contribute into your RRSP, and so that will help you to decrease your tax, because RSP is using your pre-tax money to contribute and then grow in that account. You only pay tax when you are taking money out of RSP. So when you get if you contribute into your RRSP, and you will have tax saving, and that tax saving is the extra tax that you paid if you're not contributing to RRSP. And the next one is RDSP. So they are like just one letter difference, right? RDSP is Registered Disability Savings Plan. This is only for people who are having disabilities, who are receiving disability credit, and so there's a couple other rules around it. But if you are qualified for RDSP and you can save within this account, and the government does have lots of grants and contribution like match in there, and to help you grow the money. And so the next one, I think most people are very familiar, is TFSA, Tax-Free Savings Account. Finally, it's account without starting with the letter R. So TFSA, it's a newer account compared to the other ones. It only started in 2009, and there is a limited room every year for every Canadian if you are over age of 18 and you are a resident. And so this account, it doesn't matter how much you make, if you have a job or not, and so everyone will have the same amount every year. So the government will tell you how much. Recently it's always $6,000 and it's accumulating. And in this account, you use your after-tax money to contribute, and the money grow tax-free within the account. And when you take the money out, it's tax-free as well. So it's a really tax-free account. So that's for TFSA. And another one that lots of people hear is called the RIF. It's RIFF, but it just sounds better with RIF. So RIF is an account works with RRSP. So you will start accumulating your money in RRSP until you turn age 71. So that's a time like your retirement account, the saving account will turn into an income account. So that's called the registered income fund. I can't remember. So RIF. So within the RIF account, you will have to withdraw. So the CRA will have withdrawal requirement. You have to withdraw a minimum of certain amount, a certain percentage every year, so that while you do the withdrawal, those withdrawal will count as your regular income. Okay, so I've explained all 5 accounts, and I hope this helps you to look beyond that acronym and to see which one will fit your needs and start investing. And to be honest, all of these accounts, a lot of them, they all call savings account, but they are definitely not savings account. You should use them as investments account, and they are not investments. That's another thing that people will say, will get really confused. They will come and say, I need to buy some RRSP. Like, you cannot buy RRSP. So these accounts, registered accounts, they are, think them as a basket. So you need to put your stuff in the basket, whatever that is. Either it's a stock, bond, cash, term deposits. You have to put stuff in there. And so those are the investment vehicles can help you grow your money. And so these are just the different kinds of rules around it. So we just call them baskets. I hope today's video does help you. And if you like things about Canadian finances, and please subscribe and like and share my video. And if you do have questions or you want me to cover some of the topics, please comment below, so that will help me to know what other topics we can share with the world. Okay, have a great day. Bye.